I'm going to absolutely mispronounce this name, Aditya, hopefully I didn't butcher it too bad, asks, would love your view on tax deduction strategy, including charity loans paired with max-funded IULs. I tend to get lumped in with people who hate insurance, because I comment on insurance a lot, because I again, you may not know this. When we do our reaction videos, we don't source those videos. They are sent into us by you, by the community, right? So I do not see those videos before we record, right? So what happens is my team hits record, I hit play, and I'm watching them. My team's filming me in an authentic reaction. Like, it's me watching it for the first time, then I put the phone down and I literally talk. There's no scripting. And oftentimes, you guys are sending me videos from people who are absolute insurance agents, right? And all they're doing is like hard selling insurance policies. And most of the time, they're selling policies designed in ways that I believe to be not really all that beneficial to those who are buying them, right? They're really beneficial to the insurance agent selling them because they're structured in such a way that results in that insurance agent getting an amazing commission, right? But again, I'm not saying all insurance agents are bad, and I'm not saying that all insurance policies are bad. I do believe that many insurance policy structures are overly complex, and therefore, in my opinion, many insurance agents don't truly understand them fully, and I can say without a doubt, many purchasers of those policies don't understand them fully. And Index Universal Life tends to be a policy type that is very complicated, has a lot of different fees and issues related inside those policies that many insurance agents don't truly understand. And again, the vast majority of actual insureds, individuals who actually purchase those life insurance policies, they definitely don't understand, right? And I can say that just because of the conversations I've had with individuals who've gone out and purchased those types of policies. So I tend not to like Index Universal Life. Doesn't mean it's a horrible tool as a blanket statement. I just believe that oftentimes that particular policy type is structured in ways that are not necessarily truly advantaging the person buying it. But I do believe insurance is an amazing tool just for the right projects, right? So just like you wouldn't use a hammer to fix a broken window, you don't necessarily use insurance as an investment alternative, because it's not. It is a risk mitigation tool. Now, many insurance policies have additional ancillary benefits or features that are of interest, like taking policy loans. But again, a policy loan is not you accessing the cash value of the policy, it's you getting a loan from the insurance company, and the insurance company is essentially encumbering that policy, right? They're essentially letting you go through the process of collateralizing the policy, and they're giving you the loan. Now, again, still an interesting concept because it affords the opportunity to consider things like the creation of a quasi-family bank, and utilizing those policies in such a way to leverage things like charitable contributions, et cetera. So my take on this concept is that you want to really sit down and understand, is this approach the best approach given your facts and circumstances? Or is there something better that you could be doing given what your goals and objectives are? But I love the question. I know it's not a straightforward answer, which most people like yes or no, but the reality is sometimes it truly does depend. It depends on facts and circumstances. So I want to make sure I'm always transparent with you. Michael asks, are you seeing a lot of potential in AI to help automate these strategies? I am actually. I've been really trying my best to stay toward the cutting edge with regard to what's happening in the AI ecosystem. But the reality is it's evolving at a pace that is just not possible, at least not for me, right? It's constantly in this evolutionary stage. And there are many services now that are leveraging AI in such a way to enhance what otherwise taxpayers would be doing, right? I still believe that that activity, that enhancement activity, is more in the doing stage of things, not in the strategy stage of things. Now, and the reason I say that is because so far in all of the different ecosystems we've been testing, there's still a significant amount of gap between the understanding of what the strategy potentially could be and the application of strategy to specific facts and circumstances of a respective client. But we're leveraging AI. I mean, we utilize AI as a tool. There are ways that we're constantly trying to increase our leverage of that tool, because our belief system is, just like any tool, if it can make it better for those that we serve, we want to leverage it, right? It would be really hard to change a tire without like a tire iron, right? Or at least a lug nut remover type of drill, right? You need those types of things with the right amount of torque and the right amount of like all of that, right? In order to get the tire off. The same thing happens with regard to strategies. You need the right type of tool in there, and certain tools like AI make it possible for you to be more efficient and effective, right? It is not yet a replacement. Let me say this though, again, because I'm a realist. The reality is AI is coming and it's changing the landscape for everyone. And if you are not cognizant of that, you're going to wake up one day and you're going to be like, oh my goodness, the world has changed and I missed it. Don't be that person, right? I read a paper recently over the course of the past just a few days, because someone shared it with me, and it was stipulating that it's only about 2% of the world population has been made aware of AI. Like, think about that statement I just made. Has been made aware of it. I mean, they're not even aware that AI exists. 98% of the population. Now, the reality is the 2% that are aware of it, even that is a very, very teeny tiny fraction of that 2% is actually doing anything with it, right? But the whole AI ecosystem is changing. Like, it is the fastest area of development that exists. I read something recently that if you look at the Magnificent Seven, right, the companies that are investing heavily in AI, like you're talking about the NVIDIAs and all of that ecosystem, in Q2 they spent half a trillion, $500 billion on data centers. Like, that's historical numbers, right? Like, if you were trying to compare that spending to anything else that has ever happened in history, the only thing that I think probably comes close is what the railroad industry did, like with the development of like railroads, like the capital expenditure to infrastructure. $500 billion in one quarter, and the pace of that investing is increasing and advancing significantly. We're already into Q3, and it is likely that Q3 spending will outpace Q2, right? This is something that is all in, guys, and no matter how much I wish it weren't so, this is happening, right? This is happening, and it is significantly going to change the landscape of the entire world. So if you're not taking advantage of strategies to reduce your taxable income today, to keep more of every single dollar you make so that you can invest those dollars in wealth creation assets, to set yourself up to withstand the economic challenges that are absolutely going to be a byproduct of this activity, because it's going to happen. There's you'd have to be pretty dense not to realize that there's going to be a lot of upheaval in the next 2 to 5 years. Like, if you're not doing what you can do now, like, shame on you. Shame on you. I'm doing it. I've been creating wealth now for 3 decades. Now, granted, a lot of my wealth creation has happened over the course of the past 10 to 15 years, but I've been working steadily at creating generational wealth, right? Not just for me, but for my family, because the reality is I have 2 little ones. Like my son Ryan is 11, my daughter Victoria is 9. She's going to be 10 in September. They're inheriting a world that's completely different than the world we grew up in, guys. And I need to position them for being able to survive it, right? Andrea Bell asks, does the Roth approach win if you are in a state with very high income tax? Absolutely it does. And the reason I say that is because currently you are in a state with high income tax. the reality of life is that as you age, you may choose to relocate to a state that does not. I currently reside full-time in Florida, a state that has no state income tax. But even if I stayed in a state with high income tax, it's not magic, it's just math. Do the math. The creation of tax-free money compounded over multiple years, hopefully decades, is significantly beneficial in your wealth creation journey. So I am absolutely a huge advocate of the Roth aspect of everything, whether we're talking about Roth IRAs, Roth 401ks, the Mega Backdoor Roth strategy where you combine a Roth 401k, maybe a solo K if you're a business owner, and a Backdoor Roth IRA. When you combine those two together, you get nearly $80,000 each. If you're a married couple filing jointly, $160,000 potentially into a tax-free bucket forever, and allow it to compound and grow. And like, guys, this is just an amazing strategy. So if you're not leveraging it, you're not sitting down with a professional who can give you guidance on how to do this the right way, again, shame on you. Shame on you. But Andrea, I know you're gonna reach out to someone who knows what they're doing, and you're gonna get this locked in for yourself. Mark Klonik asks, so can I do this Roth IRA strategy for myself if I'm an employee of my company? Yes. So here's the deal. When you own your own company, an S Corp, there's potential for you to institute your own employee benefit structure, which could include a 401k as an example. Now, if you have other employees, there may be reasons why you don't want to do that. But if it's just you, like a solopreneur situation, or maybe you and your spouse are employed by your company, but you have no other full-time employees, everyone else is an independent contractor or a part-time employee, well, then you can leverage something called a solo K, right, or a 401k with no other participants, and leverage that in the Roth aspect of things. But even regardless of that, if you don't have a 401k, you could still do a Roth IRA, right? And even if your income puts you beyond the ability to contribute annually into a Roth IRA, you can contribute after tax into a traditional IRA and the next day convert it to a Roth, right? So at the very least, you get to put $7,000 plus into a Roth IRA every single year. Both you, and if you are married, your spouse. And if you have kids who you're employing, which I was just talking about in the other question, if you're employing your children, you can set up a Roth for them as well. You just need earned income in order to contribute into an IRA. Whether we're talking about traditional or Roth, you need earned income. Now, again, if your income is too high to contribute into the Roth directly, you just contribute after tax into an IRA, and the next day you convert that to a Roth. Like we help clients do this all the time, right? Like one of the companies I own is a private wealth management firm. So we set this stuff up for our clients all the time. Every week we're doing this stuff. We're doing these activities. Great question though, great question. If you got value from this video, go ahead and click that like button. And if you want to be informed of new videos that could help take your life and your business to the next level, be sure to subscribe and click the notification bell.